Hey guys, welcome back. My name is Leland. I am one of the private bankers with Lee Chandler, and we also have a group called the Asset Builders Club for our clients. And so what I have behind me is a second grading scale that we use to grade assets for acquisition. And this is called taxable event. Now the grade goes from high to low, and it basically comes off of the rate of which there's a taxable income to you as a passive investor, but also the rate of taxable a taxable event. A taxable event, for those who are not aware of that, is when, let's say you sell an asset, and in many cases, depending on the year, the amount of years you own the asset, your ownership in it, all those different things, you normally pay what's called capital gains. And capital gains is a taxable event when you basically sell or liquidate an asset. So in this case, it's important to know the tax laws, because as a passive investor, you may want to know what's going to happen to the income that you receive from the business, whether that's on a monthly, yearly, quarterly, or even a daily basis. And then you also want to have an idea of what's going to happen if you choose to liquidate your position in that business. All right, so as a passive investor, what happens there, okay? So we have a grade, high, medium, and low, and the percentages here are not the percentages of good things, it's normally percentages of bad things. So for example, a high rate, and for a taxable event here, this is saying 30 around the range of 30%. So for example, if you're in the stock market, you own, let's say you own stock, for example, you sell your stock in the market and it's a favorable sale, you make a profit, and then your tax capital gains at 30%, plus or minus, right? 30%. You have medium 20% and a low less than 10%. So you have to ask yourself, as a passive investor, what's most important for you? Is it most important to have high taxable events? Is it most important to have lower taxable events? Okay, so take a pen and paper out right now. Very quick exercise. All you have to do is to decide, as a passive investor, which one of these categories or grades do you prefer? Do you prefer being taxed at 30%? Do you prefer being taxed at 20%? Do you prefer being taxed at 10%? Will that depend on whether you're actively investing in other things? That's going to depend on your CPA. So take out a piece of paper, write down which taxable event is most favorable to you, and I will see you on the next video. Bye-bye.